Hello friends, I'm CA Rachita Mantri Kabra. Let us discuss about some important highlights regarding budget as announced by Mr. Arun Jaitley. First, there has been no change in the slab of income tax rate for all persons including individuals, HUF, firms and companies for the financial year 2018-19. However, additional surcharge by way of education cess and secondary higher education cess has been increased from 3 to 4% to be known as education and health cess. However, in case of domestic company, the rate of income tax shall be 25% of the total income if the total turnover or gross receipts of the previous year 2016-17 does not exceed 250 crore rupees, and in all other cases the rate of income tax shall be 30% of the total income. In the case of company other than domestic company, the rates of tax are the same as those specified for the financial year 2017-18. Next, the most talked about amendment, that is, under the existing regime, long-term capital gain arising from transfer of long-term capital assets being equity shares of a company or a unit of equity-oriented fund or a unit of business trust is exempt from income tax under clause 38 of section 10 of the Income Tax Act. However, transactions in such long-term capital assets carried out on a recognized stock exchange are liable to security transaction tax. Now, it is proposed to withdraw such exemption under clause 38 of section 10 and to introduce a new section 112A in the Act to provide that long-term capital gain arising from transfer of a long-term capital asset, being an equity share in a company or a unit of an equity-oriented fund or a unit of a business trust, shall be taxed at 10% of such capital gain exceeding 1 lakh rupees. However, capital gain up to 31st January 2018 shall not be taxed, as cost of acquisition will be taken as fair market value as on 31st January 2018. Fourth, though the government has not changed any slabs for individuals, but it has proposed some relaxation to salaried employees, like to allow a standard deduction of up to rupees 40,000 or the amount of salary receipt whichever is less. Consequently, the present exemption in respect of transport allowance and reimbursement of medical expenses is proposed to be withdrawn. These amendments will take effect from 1st April 2019 and will accordingly apply in relation to the assessment year 2019-20 and subsequent assessment years. In today's budget, the government has proposed some major benefits to senior citizens, like the monetary limit to claim the benefit in respect of health insurance premium and medical treatment has been raised from 30,000 to 50,000 under section 80D. Further, the limit of section 80DDB of the Income Tax Act in regard to amount paid for medical treatment of specified diseases in respect of very senior citizen up to rupees 80,000 and in case of senior citizens up to rupees 60,000 subject to specified condition has also been increased to 1 lakh for both senior citizens and very senior citizens. These amendments will also take effect from 1st April 2019 and will apply accordingly for the subsequent years. Next, for senior citizen, it has also been proposed to insert a new section 80TTB so as to allow a deduction of up to rupees 50,000 in respect of interest income from deposits held by senior citizens. However, no deduction under section 80TTA shall be allowed in these cases. This amendment will also take effect from 1st April 2019. However, it is also proposed to amend section 194A so as to raise the threshold limit for deduction of tax at source on interest income for senior citizens from rupees 10,000 to 50,000, and this amendment will be applicable from 1st April 2018 effectively. It has also been suggested in the budget to amend the benefit of section 54EC, that is, investments in bond to be restricted to capital gain arising from land or building or both only. Further, lock-in period of bond has been increased from 3 to 5 years, and this amendment will be effective from 1st April 2019. Next, it is proposed to to prescribe a new scheme for the purpose of making assessments so as to impart greater transparency and accountability by eliminating the interface between the assessing officer and the assessee. For this purpose, the government has amended Section 143 by inserting a new subsection 3A for e-assessment. Next highlight is dividend distribution tax on deemed dividend is proposed to be taxed at the rate of 30%. Further, it has also been proposed that every person not being an individual which enters into a financial transaction of an amount aggregating to 2,50,000 or more in a financial year shall be required to apply to the assessing officer for allotment of PAN. All directors, partners, managing director, etc. of such entities are also required to obtain PAN. Next, it is proposed that all the taxpayers accountable for more than Rs 3,000 as tax liability are required to file the return compulsory. However, no such exemption is provided to the companies. Hence, it is compulsory for all the companies to file the income tax return. Next amendment proposed is that any capital gain arising from conversion of stock in trade to capital asset to be charged as business income in the year of conversion on fair market value on the date of conversion, and this amendment will be effective from 1st April 2018 onwards. In order to minimize the hardship in case of genuine transactions in the real estate sector, it is proposed to provide that no adjustment shall be made in a case where the variation between stamp duty value and the sale consideration is not more than 5% of the sale consideration. This amendment will take effect from 1st April 2019 and will apply for subsequent years. This was all about the key highlight of the proposed changes in indirect taxes. For more such updates, do like and subscribe to our YouTube channel. Thank you.